10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
Welcome, everybody. Jeez, Thursday night, right before the weekend. Just welcome. We are here to do our upcoming workshop for you realtors. And this is something that we had that was someone, a lot of people were clamoring about, and it was about taxes. A lot of real estate agents hate to do taxes, but that's something that's very important when you own a business. And we have a very special guest tonight, all the way from Maryland, Ronnay McGraw. Welcome.
Yes.
Welcome to the podcast. Hey, how are you?
I'm good. Thank you, Adam.
Yeah, beautiful September night, huh? To be on a podcast.
It's not
We could be
September
outside.
9th.
What's that?
I said it's not September 9th. Oh, you said September 9th.
Yeah, September 9th. Yeah.
I thought you said September 9th. I'm like,
oh no, September.
I'm about to say I'm losing days.
No, not yet. Not yet. So, well, thanks for coming on. Ronnay McGraw, she's from McGraw Financial Services, and this is someone who helped me with, some tax strategies and things. And I want her to come on to share it with you guys because it's important, when you're a real estate agent, you got to pay taxes. We're all 1099 and you got to pay taxes on everything. So, we want to make sure that we can do things and come up with some great strategies to help reduce that tax bill. And Ronnay's going to give us some great ideas. And if you'd like to have Ronnay, her help you with your taxes and things like that, we'll give her contact information, what have you. So, and if you have any questions, a lot of you guys will be joining through YouTube and things like that. If you have any questions for her, go ahead and put them in the comments section and we can answer those in real time if you want to. If you're not too scared, well, she'll do it. She won't bite. And if not, you can put stuff in the comments after this, and we'd be more than happy to address them. So without further ado, Ronnay McGraw, the floor is yours, and we look forward to what you have to teach us tonight.
Thank you.
You're welcome.
Well, hello, everyone. My name is Ronnay McGraw, and I am with McGraw Financial Services. And one of the things that I do here is I actually, I do tax strategies. I do taxes, as well as I help other business owners maximize their tax savings so that they're not giving more of their money away to the IRS as opposed to keeping it in their pocket. So, first thing we're going to talk about is business structuring and some of the tax deductions that are available to not only real estate agents, but to those that are investors or that may have LLCs, so that it will reduce their liability. First things first, let's talk about entity structuring, which is one of the first and most important things to establish. So most people first starting out are sole proprietors, and that's just a business structure that links the owner to their business. And then we have LLCs, which you can operate your business under an EIN, which is employer identification number, and a business name, which is like a trade name. The purpose behind these two different structures is one gives you protection and one doesn't. And here are some of the pros and cons of a sole proprietor. A sole proprietorship is a business structure linking the business owner to their company, which does not offer protection. It is the simplest type of business structure and is not a legal entity, meaning that you did not go to your local state office building and get a name and then do an EIN number in order to make it officially a business. But you can do you can have your name, your personal name as a business using your social. Sole proprietorships does not require federal registration to operate, and the owner of the business is personally liable for all of the business's debt. So if you owe X, Y, and Z company as a business, that bill that you owe X, Y, and Z company rolls over to you. And there is no limit to the number of people a sole proprietor can hire, though the owner is liable for all the wages, the taxes, the health and safety of the employees. Meaning that any income that you pull in, whether you pay a, an employee or not, you have to claim that money because you have no separation from your business's finances and your personal.
So Ronnay, can I? So I didn't think about this. So as a sole proprietor, you can have employees. You can hire employees as a sole proprietor.
Yes, you can.
Okay.
Only thing is, without you having a business structure, you have to physically claim all of that income, even though you've paid it out. You have to claim
Oh,
all of that on your personal tax return. And it's
okay.
not like you get to separate it from on a Schedule C where you have the business's income separate from your 1099s or
I
your
see.
W-2s. It all rolls together.
Got it. Okay. So you're claiming all of it. It'd be like in real estate terms, like it's like if you're a team leader, like you claim all the income and then you divvy it out to your agents if you want, or how you do that.
Yes,
Okay.
but without a business structure, all of that money that you didn't divvy back out, the IRS doesn't see it, does not account for it being divvy back out. All they consider it as you've taken this money in, so you have
Oh,
to pay me based off that money.
okay. So you can't even deduct the money you went out with. Oh, okay. Hence why no
No,
one
so
does that. Yeah.
exactly.
Okay. Got it. Okay. Got it. Thank you. Thanks for the clarification.
You're welcome. Also, with a sole proprietor, the proprietorship is linked to the owner individual, and all taxes considered a pass-through entity. This means you must declare income or losses accrued by the business on your personal tax return. And you'll also have to pay self employment taxes to cover contributions to Social Security and Medicare. Sole proprietorship are inexpensive and easy to form as long as you're the owner and in charge of operations. There's no need to formally register your business or notify the federal or state offices. The only fees involved are those needed to register the business name and obtain appropriate licenses and permits. So let's get to limited liability company pros and cons. With a limited liability, it's straightforward, simple, unilateral filing paperwork. So you have your Schedule C and your 1040. The Schedule C is for your business transactions. Your 1040 is for your W-2, where you record your W-2 and where all the information from your Schedule C pulls over to. The maintenance and annual fees or LLCs can correspond with annual reports and fees of as much as hundreds of dollars. So with a LLC, you have to register it with the state that you
Mhm.
whichever state you're located in, so that they re, they charge you annually to maintain good standing. So and you want to stay in good standing because any type of business you try to operate or that you try to venture with will look on on that state's entity thing to see if you're in good standing or not. It's easy to get out of good standing. Some point is your thing being filed late, or they're not, or there's a mix up or something happened, but it's easy to get back reinstated. You just have to file your personal property return and it puts it back within good standing. There are unlimited member with an LLC, they have what's called members. The members can be unlimited, but you will be the first member of your LLC. And you can have management options. So it's easy to set up, but it's a lot to go through when you want to remove a member from the LLC. And the
How much?
owners,
Oh,
go ahead.
oh, Ronnay, sorry to interrupt. I get this question a lot, and I'm going to ask it now, and then you can answer it maybe later. But how much? You mentioned about couple $100 to keep things in good. How much does it cost? Because a lot of people think an LLC is really expensive to start up. But how much is it to start an LLC? Like the filing fee with the state?
The filing fee is different for each state.
Mm-hmm.
And a lot of people hire outside companies to do it. And that can cost you more than what it would cost you to actually do it yourself. The
Mm-hmm.
process is really not difficult.
Mm-hmm.
It
Right.
really isn't. The EI to get your EIN is absolutely free through the IRS, and you can get your EIN Monday through Friday between believe it's 6 a.m. or 7 a.m. in the morning up until as late as 9-10 o'clock p.m. Eastern
Okay.
Standard Time. So that's free. But a lot of companies charge you to do the formation, which is all they're doing is looking up a trade name that you submit to them, which is free to look up on your state registry to see if that name is available.
Right.
They're also charging you to do the filing fee. It's cheaper if you do the filing fee yourself as opposed to paying an outside company, because now what may have cost you like $195, you'll end up paying $400 or $300
Right.
for it just because you're paying someone else to do something. Some people make the process seem more difficult than what it really is, but the
Mm-hmm.
process is really simple.
Yeah.
The
Yeah.
only part that may take a little bit more of your time is your operating agreement, which is still really simple because U.S. legal forms, LegalZoom, all of those places have operating agreements, and all you're telling it to do is you're inputting your information, the terms that you want, and they're spitting out the operation agreement for you, and it may cost you $15.
Okay.
So
Yeah. It's pretty cheap.
it is. And so I'm not I'm not about to rip people off and have them thinking that some of this stuff costs way more than what it is. It is not. And
Mm-hmm.
that's some of the things that I've learned along the way, because people were being my first time doing it, I paid almost $500. I didn't know any better.
Oh
But
yeah.
when you know better, you do better.
Yeah. That's right. Yeah.
So, and
And
with
if
that
anyone
being,
has any questions for Ronnay on this stuff, because I know I'm glad you're bringing this up, Ronnay, because a lot of agents will say, because most of our agents are just sole proprietors. And the question comes up, and you might hit it, so I might be getting ahead of myself, is like, well, when do I go from a sole proprietor to an LLC? When does that conversation come up? And so we have about a dozen live viewers right now. So if you guys have any questions, put them in the private chat, and I'll bring them up to ask. So, but go ahead, and I promise I won't keep cutting you off. I'm
it's
excited
okay.
about this info. Yeah.
And with a LLC, members and the owner can take draws from the company profit account rather than taking salaries. So you have an option with the LLC of putting yourself on payroll or taking a draw. But if you're making, if you're an LLC and you're making over six figures, it would be best for you to be what's called an S corp, because then it actually gives you added benefits to just your LLC. With your LLC, you don't have to pay, with S corp you don't have to pay social security tax or self-employment tax on the profit of the business. You only pay that on your portion of the salaries. And then with the S corp, your business tax return and your personal tax return are segregated. So you'll file two tax returns a year, one for the business and one for your personal, which prevents you from having to pay double. I'm sorry, I'm jumping ahead of myself. I get
No.
excited when I'm trying to save people money and when I'm trying to explain the benefits and pros and cons of each. Um,
How much, Renee? How much? With an S corp, you said like, listen, if you're making $100,000, you might want to think about an S corp, becoming an S corp. What about from a sole proprietor to an LLC? Is there like something like a rule of thumb? Because I know everyone's different, but is there a rule of thumb saying, hey, listen, you might want to become an LLC because you're making a profit each year,
no, the
or what would be a
LLC is
benefit?
different. Well, with an LLC, you can be an LLC starting from day
From
one. Like you could
scratch.
form your
Right.
business and become an LLC from day one.
Hmm.
The biggest difference between the LLC and the sole prop, if you're an LLC from day one, you have that protection uh, towards your assets. So if anything happens, Lord forbids, negligence or an oversight, and someone sues you,
Hmm.
your personal assets are
Okay.
immediately separated.
Got it. Okay.
So they can only sue your business and not your personal for a business error.
Okay. So it's more from a sole prop to an LLC. The biggest factor would be just for the protection, the separation of your
Yes, the
business
biggest thing is
assets.
your protection.
Okay.
And you get a lot of discount tax deductions with LLC that you don't get with a sole prop.
Would you recommend most realtors when they get started, day one, become a LLC, or maybe after their first year?
Well, my recommendation would be for real estate agents, I would say, depending on what all they're going to be venturing into, if
Okay.
they're just going to be selling houses and that's it and nothing else, and they're not going to get any property in the business name, or they're not going to get a vehicle and use it for business as well as personal use, or if they're not going to be taking advantage of any other deductions, then they can be a sole prop. But it's just they get deductions that is allotted with a LLC that you do not get with a sole prop, because
Yeah.
sole props do not allow you to take business deductions.
Okay. Yeah. I mean, and most people, I mean, when you're in real estate, you have a vehicle. Or continuing education and things like that. So,
Yes,
yeah.
you get to
Yeah.
claim all of those
Yeah.
expenses.
Okay. All right. Great.
And just to list some of the tax deductions that you're able to claim as an LLC, you're able to claim your business meals. If you take a client out to lunch to discuss um, the sale of their home or the purchase of a home, you get to
Okay.
deduct that meal. Or travel costs where you're traveling from if you're licensed in multiple states and you have to travel to a different state, um, you can use your hotel costs or your gas or anything associated, your tolls. All of those things are deductible. You can deduct mileage, you can deduct your repairs and maintenance, You can deduct your lease payment if you're leasing the vehicle. You can deduct depreciation. All of these deductions are available to you as a LLC.
Hmm.
And then you get to also do um, your rental mortgage, your utilities, your home renters or homeowners insurance, any maintenance you have to do to the home, your internet, because all of these things are necessary in order for you to run your business. You also get to do advertising and marketing costs.
Yeah,
You can
big one.
deduct personal property up to $100,000 in the financial year in which you acquired it. Your equipment, your computers, your office furniture, standard computer software bought as a product, your licenses and your dues, any type of educational credits you take, or any additional training you take as a realtor. All of these things are deductible. Any insurance premiums, any gifts you buy for the homeowners who purchased a home and it's sold, and you buy them a little housewarming gift, those are deductible. You're able, and you're also able, if you are on payroll, those payroll fees and are deductible. So, like, you get to deduct your payroll from
Oh,
your income.
like your ADP payroll if you're paying yourself. Okay.
Yes,
Can I ask a couple questions on this list?
yes,
Um, is you talk about like writing off because everyone at every realtor has a home office, right? And it might be your bedroom, right? Or a legit office, right? So
hmm
to write off like like your home office, what I thought I remember when I took this seminar was like you basically say your house is 1,000 square feet for the sake of math, and say your home office is 250 square feet. You're basically using 25% of your home for your business. So if your electric bill's $100, you can write off $25. Is that right? Because any utility, now internet might be a full write-off, but is that how you can write off utilities and things? It's a
yes, but
percentage of your footprint?
right, and also when thinking of a home office, that the whatever area you're using as your home office has to
Mhm.
be exclusively used for that purpose. It
Okay.
cannot be like,
Like
let's
a
say your
bedroom?
home office is here, but you're also using it for like your guest bedroom. You can't write that off because it's not really a home office in
Oh,
itself. It has to
got it.
be a space specifically dedicated to working your
Okay,
business.
interesting. Okay, so if you have a desk in your bedroom, you
You cannot
cannot.
write that off
Oh, because it's a bedroom. Okay.
because it's your bedroom.
All right.
And that's where you're sleeping at. And that's where
Right.
you're watching your television at, or that's where you're doing other
Oh, okay.
activities at. So therefore, you cannot deduct that space as your home office.
What about some people who I know this is might be funny, but some people build she sheds or like those container offices where the office is like separate from their house. Is that just like a one-time deduction for the cost of constructing it? Because it's not really part of your footprint of your house. Does that make sense? Like square footage?
Right, but it's
Is that
not a
different?
part. Right, is that's like its own separate
Yeah.
thing.
S-
It's not because it's not a part of the dwelling.
Yeah. So maybe just a one-time expense to build it and
Yes, it's not like, because if it was
okay.
a dwelling within your, let's say you had an additional room built onto your home
Yeah.
specifically for your office, then yes.
Got it. Okay. Okay. Um, what was the other thing I saw on there? Insurances, license and dues, gifts. I think a lot of people know that. Um, Personal. When you say personal property up to $100,000, what is that? What does that mean?
Like if you get a vehicle, a vehicle that you're going to use strictly for business,
Mm-hmm.
or your equipment, up to $100,000 in a financial year, you can write that off. So
Man,
that
what would that
includes
be for a realtor? I mean, a car, that would be it, wouldn't it? I mean,
right, and
computer equipment.
some people go out. It includes your computers
Uh-huh.
or like printers or any type. Like if you go buy this huge printer for marketing purposes because you don't want to pay someone else to do your marketing, but you have that knowledge to do it yourself, and you
Mm-hmm.
go and purchase a printing machine.
Okay.
Those are costly, but you'll be able to write that off.
Got it. Okay.
And if you have your office, or if you have an office outside of your home, most people have their office in their home because it
Right.
saves more money. Plus, you get to write off portion of your rent or mortgage, your
Mm-hmm.
utilities, and everything else that is associated with your home. But they have what's called Section 179, which allows you to write off a vehicle purchase in the first year that you've purchased it, as long as it's over 6,000 gross gross weight and under 14,000 for business purpose. And you get to write that off in the same year that you for the same tax year that you purchased it in. But you can't purchase it, for example, you can't purchase it in 2023 but want to write it off on 2024's tax return. You cannot do that.
Okay. So this would be for someone who like is winding down in the year and like, oh my gosh, like we're gonna owe $30,000 in taxes. We better go out and does it have to be brand new? Like I'm
No,
gonna have
it
to,
has to be new to you.
oh really? Okay, so I need to
Yes.
go out and buy a used truck, big truck, or anything over 6,000 pounds or a big SUV in cash. Because if I borrow the money, that doesn't you
No,
can't
it's still it can still be leased.
oh, okay, the lease. All right.
It can be purchased or leased.
Okay. So if you the
It
lease,
just can't be it gives you limitations. But if you purchase it, and I'm actually going to, it actually is on one of my slides too.
okay.
So
Yeah, let's yeah,
to give
sure.
more information on it.
Yeah, that'd be great.
Here it is right now. The section 179, where you could allow you to write off all or some of the original purchase price after the first year, using
Okay.
the section 129 deduction. Is this is a special deduction for IRS code section that allows business owners to write off allowed purchase price of a car in the year it was purchased or financed.
Oh, even financed.
Yes. And then the 6,000 pound vehicle tax deduction is a rule under the federal tax code that allows people to deduct up to 25,000 of vehicle's purchase price on their tax return. And this vehicle purchase must be weigh over 6,000 pounds
Hmm.
according to the gross vehicle weight, but not more than 14,000 pounds.
So if I go out today and I find a truck or an SUV over 6,000 pounds, under 14,000 pounds, and I go to the bank and I say I need to get a loan. This truck is $50,000. Even though I finance the whole $50,000 and I don't put any of my own cash in it, I can take that $50,000 deduction. If fif- is that what you're saying?
According to the section 179, you can write off depending, it also depends on um the vehicle. Like if it's, you can't just say, well, I'm gonna go out and buy this luxury Rolls Royce
Hmm.
or Rolls Royce truck if they have that. But
Okay.
some elaborate vehicle, um, that's over $100,000 and expect to write that off, it is a limitation to that.
It has to be practical to your business.
Yes, it
Yeah.
can,
Okay.
you can't just say, like, I know people who've actually gone out and bought a Mercedes AMG vehicle. You can write that
Okay.
off.
Yeah. That makes sense.
That's something practical. It's not like, okay, I'm trying to showboat and I want to still get a tax deduction, because that is not in line with normal operation of a business.
Mm-hmm.
And then we have also the Augusta strategy, which allows you to rent out your home to your business for 14 days or less a year. So, with that being said, let's say a group of real estate agents want to get together and have a meeting on how they want to move forward in reference to um, their marketing strategy.
Mm-hmm.
If you've rent out your home, and let's just say you've rented out for $175 an hour, and you do a full day of that,
Okay.
you're allowed to take that deduction for the Augusta strategy because it's for a day, and if you only do it once a month, that'll give you 12 days, and you basically have
Oh, I
paid your
see.
mortgage.
It doesn't have. I see. It doesn't have to be 2 straight weeks.
No,
Okay, because this came
14 days.
from people renting out their house for the Augusta tournament. And there's a lot of people in Dublin, Muirfield, which is in Central Ohio, that do this. They rent out their house for a week for that golf tournament. So, but then
Exactly. And
okay,
it
but
doesn't have to be your meeting. It could be you renting out your house for any type of business. But
okay,
it long as um it's for a business use and it's under 14 days in that year, you're
okay,
allowed to claim that. And it allows you to, and what happens is, let's say you rent it out, it has to be reasonable also. So
right,
the rule of thumb is, get shop around, get a different couple of quotes so that you'll have paperwork to document the cost behind it.
right,
If you rent it out to yourself, but if you rent out to someone else, they didn't pay your mortgage for that month,
right, right.
and it didn't cost you anything.
Hmm, that's
So
interesting.
there are a lot of different strategies that you can utilize. And then a lot of real estate agents already know about the 1031 exchange, which is a tax break. Um, a lot of investors also utilize that. So when they do the like kind, where they swap it out so that they don't have to pay the taxes on their gain.
Yeah. So, yeah, and this is pretty common for any agent that works with investors. Them like buying a piece of property and selling it, and when you do that, you have to buy a bigger, like more expensive property.
So that it
Yeah.
offsets.
Yeah. Yeah. It
Yes.
doesn't have to be, a lot of people think it's bigger, but Ronnay, it's actually just more expensive, right? It's not, it's
Ex-
the price, not the size. Is that
Right.
right?
And it has to be the same kind. It has to be the same kind. You can't say, well, I'm gonna go buy this. I'm gonna go from a 3 bedroom, 3 bath house to this mini castle. That ain't working.
Okay.
So you can't say, well, I'm gonna use the 1031 exchange going from a 3 bedroom, 3 bath to a 7 bedroom, however, 7 bath. That's not
Okay.
the same kind.
Got it. Okay. Can you go from a residential property to, and then say, I'm going to do that to a, like a little office building? That's, about the same price. A little bit more. I'm sorry, a little bit more in price. Can you go to from a residential to a commercial?
They prefer to be the same kind,
Okay.
commercial to commercial, residential to residential.
Okay.
Um, because that same kind, commercial buildings are typically does not have bedrooms in it. So you
Sure.
can't go from a 3-bedroom house to a commercial property because it's not, and say, well, I want to apply to 1031 because it's not the same kind.
Got it. Okay. Got it.
And then another tax strategy that I wanted to tell you, if you have children
Hmm.
that are at
Oh
least
yeah.
6 to anywhere that start at 6 and up, you can get them to stuff envelopes or seal envelopes or fold papers. If you are LLC and you are S corp, you can take and put your children on payroll, and you don't actually have to necessarily give the children the money, but it that income reduces off of your business's income, reducing your taxes off the income that the business brought in, because that's another um, tax deduction. Children on payroll is a that's like the best thing.
Yeah. So they have to be 6 years old or older.
No, but
Oh,
most,
okay.
but it has to be reasonable. You can't say, "Well, I want to
Okay.
take a 4 year old and
Yeah.
tell them hold these papers." That
Boy, this is exciting. I have 4 kids, Renee, so I'm going to put them to work. So I want to make sure I have
yeah,
this very clear.
and you have to create a job for them.
Okay.
Like example, like if you have them, well, you're going to have them put a stamp on a postcard. That's
Yeah.
a job.
Okay. And
It
then how do you
doesn't.
decide what to pay them? I mean, within
Um,
reason, right?
it's within
$10
reason.
an hour.
The job
Okay.
has the income has to justify the job that they're doing.
And then do we 1099 them? Right? Is that what
No,
we're doing?
no, actually, is a reduction against the business. So the children actually don't get a 1099.
Okay.
It's just a reduction on your tax return for the children.
But you only can do that up to a certain amount, right? Is it like 12,000 a year or something like
Yes.
that? Okay.
Actually, it depends on your no, it's 13,000. It's
Okay. You can't.
13,000 now. Because
Oh,
last
okay.
year it
So you
was
can.
I I have to look to see if they're going to change it for 2024. But
Okay.
for 2023 it was 13,000.
Okay. Yeah, because you're not paying a 15-year-old $40,000 a year. Yeah.
Exactly.
Yeah.
So
Right. Because that makes no sense. Okay.
right.
All right.
Because
Okay.
people would, if it wasn't a cap on it,
Yeah. If
it
you're
would be,
Elon Musk's kids, his 7, 8 kids, they would
yeah.
be they'd be
And
getting a couple billion a year. Yeah.
another good strategy, putting yourself on payroll, because what
Hmm.
a lot of sole props are doing are they're paying self-employment tax on the money that they earn.
Hmm.
Self-employment tax on top of the IRS tax is killing you. You end up owing when you don't have to owe, just by the self-employment. But if you're an LLC and you say,
Right.
okay, well, I'm paying myself this amount and the business has this amount and I have these amount of
Mhm.
deductions, it reduces what you owe in taxes just by being an LLC. But as an S corp, it gives you even more because you can say, well, I paid myself this much for a salary. So then you get to deduct your business. Let's say your business brought in $60,000 and you paid yourself 30,000. Well, you
Mhm.
only have to pay tax on $30,000 for the business, as opposed to the
Right.
60,000
Yeah.
that you had left over. So that's a savings in itself right there.
Okay. Hmm. And then you say you paid your children, right? You had,
Exactly. So you
you
see how
know.
all that just on top of each other, it just reduces the amount of tax liability and self-employment tax that you will
Hmm.
owe out from your business, and allows you to keep more of your business money in your pocket.
Right. Okay. No, that's all really good info. Yeah. Okay. Thank you. What else do you got for us, Renee?
Okay, so I have some additional information for like just basic record keeping. Some
Oh, that's a good one. I
agents,
was going to ask you that question if we didn't cover it
they
tonight.
don't, right, keep track of your expenses by entering them into a accounting software like QuickBooks or any
Mm-hmm.
other software that you choose, or hire a professional to do your bookkeeping.
Mm-hmm.
One, it keeps you more in track for tax time, so you're not scrounging around looking for things.
Right.
And if you are doing mileage as a deduction, doing mileage tracker as a deduction, as opposed to doing the the excuse my language, just went brain dead.
You didn't
If you're
cuss at
just
all.
doing
Yeah,
the
you were
regular
fine.
mileage as opposed to the standard deduction, if you take in mileage, if you have a mileage tracker, it will keep
Mm-hmm.
track of your miles for every
Like,
location you go to.
right. 'Cause-
Therefore, you won't have to do it manually. But once you can, it's an app, and I have a link to it in this presentation. Once you put it in, you start it, and then when you're done, you stop it. It calculates that for you, and now you have it. So you don't have to worry about physically taking a pen and paper, writing down your mileage every time you go to
oh yeah,
a
that's
location or go to a showing. Everything is done for you, and they integrate together. And for like your receipts, if you're using an accounting software, or even if you have a bookkeeper, you can upload your it like in QuickBooks. It has this feature where you can upload your receipts into
that take a
QuickBooks, and
picture.
it categorizes it
Okay.
so that when it comes time to filing your taxes, all of your information is right there, and all you would have to do is print out your P&L, which is your profit and loss, and it has everything for you. Or you can do it more detailed and have it set up to tell you where and it breaks everything down for you anyway. So therefore, all your information is in one location, so you don't have to wonder, well, how much did I spend on this, and then have to go shuffling through receipts to try to calculate everything, because everything's all in one central location for you. And if you're doing
Can I
your
ask you?
own bookkeeping, please ensure that your categories are set up correctly under the appropriate general ledger account. Because if it's not, you can overstate one category and understate another, and it will throw you off.
Okay. One thing that I did was differently was I think everyone knows, like especially realtors, oh, keep your mileage, do your mileage, do your mileage. But with um, us doing a lot of virtual stuff at Ashmont Realty, for example, I don't drive to the office as nothing like I used to. So I don't do as much driving because we do a lot of stuff virtual like this. So I
Mhm.
guess the thing is that came up there, like, listen, you can do mileage. And Renee, what is it mileage now? 60 some cents a mile. Is that right? I don't know. I can't remember. But what the other option, like you were saying, is you can do mileage and you got to keep track of it, right? But the
Mhm.
other option, which I didn't know, was you can do all the expenses.
Yeah.
And what I found out for me personally, everyone is different. Okay. Early in my real estate career, I don't think I would have gone this route, but I had a lot of car repairs this year.
Mhm.
And and what I was reading was like, listen, if you don't do mileage, you do the like more the like expense on your vehicle, you can write that off. So I had unfortunate car repairs. You have tires, oil that goes
Yes.
into it, and they were also saying car washes. Now I wash my car by hand, so that's not a big deal. But I was like, oh my gosh, I never knew that was an option. I always thought it was like mileage, and it was
Right.
better for me to do it that way. So it was something to
I
think
would
about.
recommend doing it, but we have some realtors who still drive to showings,
Oh yeah, sure.
and they may have to go out of the way because it may not be the capability of doing a virtual showing for that, or they may have to
Right.
drive to the house and upload,
Sure.
and click on the link and then do a walkthrough for the
Mm-hmm.
house for that showing. So
Right.
either way, whether they're actually meeting a client at a house or they're going there to do a virtual tour,
Mm-hmm.
if they don't already have a virtual tour link set up to where it actually shows it to you, then you still are using mileage on a vehicle to go there.
Right.
But
Yeah.
mileage is mainly for if you are using your personal vehicle to do business appointments.
Got it. Okay.
But if you're using let's say you bought a vehicle strictly for business, then you wouldn't need to necessarily do mileage because you get to write off everything associated with that vehicle.
Mm-hmm. Right. And car payments, insurance, and all that.
Everything that associated with that
Yeah.
vehicle, because because it's a business vehicle, they
Mm-hmm.
all become business expenses.
And should you put the car in the business name?
You don't have to necessarily put it in a business name. Some
Okay.
people do, but in order to, some states are more stringent than others, where some of them will allow you to put it in your business name without giving you a lot of hassle, as long as you have your incorporation paperwork, your EIN
Mm.
number,
Okay.
and you have at least 3 months of bank statements to show, hey, I make X, Y, and Z, so I can afford this payment.
Okay.
Um, so it just depends on which route you want to take.
Got it. Okay. Thank you.
So it has its pros and cons with it. Um,
Um,
and and some realtors who are new to the game may or may not the know a lot of these tips and tricks.
right.
So that's why I added them in, just because we have new realtors come all the time. So therefore, you don't want to set them up for failure from the beginning. You want them to know
Mm-hmm.
upfront what all they can and can't expect, and what's the best way to move forward.
Yeah. What I guess I'll ask you this. Say this, because we have a lot of newbies. We're a growing company. We have a lot of new agents and things. So if you're a new agent and you're like, because I'm telling you, this is how realtors are, Renee. So if they're like, oh my gosh, like taxes are coming up, right?
Mhm.
We're in fourth quarter. What advice can you give them right now and say, listen, I know you're a new realtor, but you got to get your stuff together. What be the first steps that they need to start taking now between now and the end of the year? What should they be doing?
First
Does that
things
make
first,
mm-hmm.
set up a system to keep track of all of their documentation.
Okay.
Because
Going forward.
as a new realtor, you don't want to be having a bunch of receipts. Mind you, receipts start to fade after a while.
Yeah, that's true.
So if you don't have, you don't necessarily have to hire a bookkeeper to do your bookkeeping. You can do it yourself if you choose, but take pictures. My best advice: take pictures of your receipts if you are not utilizing an accounting software, so
Mm-hmm.
that your receipts don't, even if they fade, you still have a legible copy that you can use to get all your information together.
Okay.
So it'll be the biggest thing, because between now and December, a realtor can get a lot of expenses,
Mm-hmm.
and it's easy to lose a receipt. And
Right.
the last thing you want to do is lose a receipt that, let's say you spent a couple $100s on something. You don't want to lose
Mm-hmm.
that receipt. Take a picture of it.
Right.
You have it.
Yeah. That's good
That
advice.
way, you have set yourself up to where you're not losing any type of pertinent information.
Got it. Okay. And all that stuff is on apps on phones, right? I mean, there's QuickBooks on
Yes,
your phone and yeah, all that stuff is. And there's a lot of other software that's out there that kind of helps with the mileage and all that stuff. So it's right on your phone itself. So, yep, yep, yeah, yeah. It's something you gotta. It's not fun, believe me. But what sucks is when you have a good year and you got to pay a big tax bill.
exactly.
That's even sucks more. So for all you
And that's
newbies
one of
out
the
there.
things that I really try to avoid going and from the beginning, because I don't want people to have to pay more than what they need to pay
Hmm.
for any form of activity that will allow them to get ahead. You
Right.
know, we're in the fields we're in to make money. Hopefully we enjoy what we're doing so that it doesn't necessarily feel like work. So you're
True.
not stressing like, oh my gosh, I'm dreading this, but that you
Mhm.
enjoy what you're doing. So you want to make your job, you want to work smarter, not harder.
Right. Yeah. No,
So
I agree. Yep. Yeah, that was an initiative for me this year, really to start understanding this and things. And if you don't learn, I know this is maybe like a boring topic because we're not talking about leads and cool marketing stuff because that's how we're built. But like, you got to do it. And if you don't want to do it, then you better hire it out. Hire someone like Ronnay, and she'll crack the whip on you and get you organized because you just don't want to pay more money than you have to. Yeah. So.
exactly. And as a new agent, um, you're not going to have a lot of bookkeeping to do. Yours is mainly going to be just uploading receipts
Mm.
and setting up your QuickBooks if you want to do it on your own, or
Hmm.
setting up your QuickBooks if you have someone else, if you have myself or someone else to do it for you, so that everything is streamlined and it works seamlessly together.
Yeah. Very good. Um, is do you have another slide left, or is that it?
I have one more left,
Okay.
and that is the one with the resources.
Ah.
Um,
Okay. Oh, the mileage
I tried to
tracking.
make it as a I tried to make it clickable, but in the PDF it did not want to cooperate. But
Yeah,
this
that's okay.
expense, but if you type in this expense, let me see if I can put it in the chat. If
Oh,
you
yeah,
type,
that'd be okay. Yeah,
I'm gonna
because
try to I'm gonna try
this
to
will
put
be
it in
in
the chat.
video format, Renee, and they will not be able to click it. So,
Oh,
but if you
okay.
want, yeah, but if anyone's watching in the
This
watch,
this
they can.
expense tracking form is a form that I created, and it allows you to track all of your business expenses and
Okay.
all of your equipment purchases, so that, and it also gives you a spot to add your income. And the slots are pre-calculated, so all you gotta do is once you enter the information, it automatically calculate it where it needs to be, and that'll
Um,
help you to get a handle on your monthly expenses as opposed to your income, so you'll know where you're spending more money than you need to, or where you're not spending enough money and you need to ramp it up a little.
and what we can do maybe is for everyone at home, I'm going to bring up Renee's info here in a second. Um, and shoot her an email. Maybe you can send this deck to people. Is that
Sure,
would
if
that be
I don't
okay?
have no problem with that.
Okay, yeah, because I'm going to bring up her information now. And we do have some questions coming through. Do you mind taking a couple minutes, Renee, to
Sure.
answer some questions? Okay. So the first question really had to do with something that I was really excited about with my 4 kids because I'm ready to put them to work. Thank you, Renee. But it's around that, and the question was, can it be like now? Because we talk about our children, I think blood children. Can it be dependents? They said, like, can it be nieces or nephews, or is it just your biological son or daughter? Does that make
It's
sense?
like, if you're all living in the same household,
Hmm.
then you can do that. Your dependents, as far as your children, as far as IRS is concerned, they are your dependents.
Okay, so if they're a dependent
But
on your taxes,
I've known of situations where like um they've hired a niece or nephew to do a job. They can still claim that
yeah.
because they have a child under the age of, they have to be under the age of 17.
Oh, under the
Under
age of
17.
17. Okay.
So that they are getting that deduction. You can't hire out your 21-year-old and say, "Oh yeah, I want you to get or your
But they
18
could
say,
be
"Well, I want you."
yeah. I mean, I guess they could be an employee, right? Or a
Right. That's
1099.
why
Yeah. Yeah,
yeah.
but they're paying
So you're
taxes
still
on it.
that's still a payroll deduction.
Yeah, right.
So
Payroll
even if it's not
deduction.
your dependent, it is still a payroll
Yeah.
deduction. So therefore, you still get that deduction from your business income.
Mhm. But they're going to have to pay taxes unless they can have deductions to offset that on their end. Because yeah. Is that right?
Um, okay, like my example, my 17-year-old
Hmm.
works outside the home.
Okay.
Um, the taxes that he pays is nowhere near the taxes
Yeah.
I pay.
I see what you're saying. Okay.
So taxes on a teen's pay is not going to be the same as it would be for us. And teens are not generally going to make $20,000, $30,000
Right.
initially starting out. That is, first of all, the IRS is going to
I don't
start
know,
raising
Ronnay.
eyebrows.
Well, I've seen McDonald's pay 20 an hour. So maybe, I don't know.
They paying 20
Things
an
are
hour?
changing.
Hold
Yes,
up, where?
here in Central Ohio, heck yeah. I don't know. It's close to that. I saw Five Guys. Well, someone a fast food was almost $20, and I can't remember where it was. That was during
Wow.
COVID, so that's probably changed. And
Oh yeah, but
so
during COVID, everybody was paying extra because they
yeah,
needed
I
people to
almost
work.
worked at McDonald's during that time because that was they were
Actually, I
making.
did see something on Facebook where someone was paying, where McDonald's was paying $21 an hour.
I don't know where it was. Maybe California. I don't know what it
But I
was,
bet
but
you McDonald's not giving out a lot of hours paying $21 an hour to
right,
one
yeah,
person.
right. We have another question. You
Okay.
ready?
Yes.
All right, here comes Stephanie. Is there a cap per child? Is the cap per child or total? I think when you were mentioned like $13,000, is that what you said? But that's per
Yeah.
child, not per. You only got $13,000, and you can disperse it out amongst 8 kids if you had 8 children, right? Is it per individual child? Does that make sense? Like I can do
Um,
13,000 per each of my 4 kids.
well, what happens is, give me 1 second.
Sure. Yeah. And if it's something you have to dig for too, we can always, Stephanie, we can always put that in the chat, or you can reach out to Ronnay also too, because there's so much. And I'm putting Renee's information below, everyone. If you see that's her number and her email, and I'll have you plug that stuff here, Ronnay, and about your services if you want to reach out to her.
Okay. Give me 1 second.
Okay.
I think I know a lot of things have changed. Things are changing constantly, but I know last year it was 13,000 for the child deduction.
Yep. Yeah. Stephanie's question was, is that per child or is that just in general? All total. Yeah.
I believe it's
I thought it was per.
I thought it was per child.
Yeah.
Because
I thought it was. Some of the podcasts I was listening to
it's not.
that was my New Year's resolution. I thought it was per child. Now I don't know if you have 10 kids, if you can do 10 kids. I don't know if it's like
I don't
you
think
can only
that's
go up to 3.
Yeah, the IRS going to start
Hey, you never know, Ronnay. You never know.
Yeah, that is
But
true. They're
there might be a cap. They might say, well, you can do 13,000 per child, maybe up to a certain amount. So I don't know, but maybe to keep things moving along, because we kept you on here for about an hour, Ronnay. Maybe if you can look that up and throw it in the chat or something, or Stephanie, I'll put her number, her contact information up if you want to do that. I have another question if you want to shelf that one,
Well, it says that
or do you have it?
children under 18 aren't subject to Social Security, Medicare taxes. So you don't have to worry about those.
Okay.
Um,
I know we're putting you on the spot here.
I know. I wasn't prepared for that question.
Yeah, that's okay. We'll just shelve it, and then we have another one because we're at the
Okay.
hour mark, and I respect your time here. So we have another one. Are you ready?
Yes.
Okay. And then we can do one more after this if anyone has another question. If you have multiple businesses, are you allowed to hire them for more than one business? Oh, probably going back to the kids stuff. See, there's a lot of excited people wanting to put their kids to work. So if you
Well,
have,
each business has its own um expenses and
okay,
income. It depends on
okay,
how they are, if they have them commingled or if they have them separated. Now, let's say if you have an LLC for this business and you have the kids working on this business, and you have an LLC for a different business and you decide to have them work on that business. I don't see where there's a problem with that, but you can't say, well, I have all these businesses under my social, but I want my kids to work on all of them, and
yeah,
then I pay and I deduct it. That's not going to work.
okay. So if you have two businesses that have their own EIN number, they're an LLC or S corp, for example, and your children work in company A, you can do the write-offs. And then if you hire them to work under company B, which has their own EIN, their own LLC, or what have you, then you can have them work over there too. So is it $13,000 for company A and $13,000 for company B? Does that make sense? So
Yes,
that
because
child,
they are individual, because they are
right?
individual.
Okay. Yep. Stephanie was asking about your contact info again. Stephanie, it's right below. That's her number there, the 410 area code, straight from Maryland. We got Ronnay McGraw here, and then here's her email address below, if everyone can see it. She said she got it. Okay. All right.
But I thank
But
everybody for their time this evening.
yeah, I think that's the last of the questions. Ronnay, thank you for coming on. You want to plug anything or shout out or anything before we get off?
Um, Actually, tax season is coming up.
Uh-oh.
Please,
Right.
please, please start thinking about systems and processes to make your tax preparer's life easier,
Yeah.
because nobody want okay, I got dumped one time with bank statements and was
Oh.
told figure it out. 2 years
Did you
worth.
charge by the hour? Because that's you Barbie were rich after you went through all that.
Listen, I had to go through 2 years of bank statements trying to decipher what was a business transaction from what was a personal transaction.
Oh yeah,
That was a nightmare.
yeah, forget that.
So
Yeah. And
please
how do
don't
you
do
know?
that.
How do you know what it is? If I take
So,
everyone out for pizza, how do I know it's pizza? Yeah, I mean,
and
how
how
do you
do I
know whether
know
me taking the kids out or me taking
exactly?
the
So
crew out?
that was a
Yeah.
tough thing. And then they
Right.
use their business account and personal account commingling funds. Oh, that's another thing. Please,
Oh,
please, please
separate.
do not commingle. And what I mean is have a different account from your personal that you use for your everyday eating out, whatever you're going to do with your money, or go clothes shopping, and have a separate account for your real estate transactions.
Mm-hmm.
That way, all of those transactions are under one account. So
Mm-hmm.
therefore, we do not have to play let's find the deduction,
Yeah.
because that that ends up costing a real estate agent as well as other business owners a lot in the end in getting their taxes prepared, because we have to do so much more work
And
to
there's so
try to
many
get
free
you in order.
business accounts. Yeah, I mean, most banks have free business accounts. Just keep them separate.
Yes.
Yeah.
And just use
Right.
one for one for business and one for personal. I don't care if you have 3,000 personal, just use one for business.
Yeah.
Just one separate account. That way all your transactions will be in one central location.
Yeah. That's a good advice. So, all right, Ronnay McGraw with Ronnay McGraw. Answer for you. So if you want to have her help you with your taxes, let her know. So with that being said, thank you for coming on, Ronnay. Thank you so much, and
Good night,
thanks guys
everyone.
for staying on. This is a long one, but a really good one. And I will see you guys all very soon.